Hey folks, and welcome to the Pipnotic Symposium for the 4th of December 2019. Today we're going to have a look at a question that came in, which was regarding buy and sell zones. I know we talked about this a lot, but I think we'll cover it another time. We'll use this example on the dollar Swiss franc that we covered from Monday's session. And so, if you look at a price structure like this, you can see that. Get my drawing tool. We have price that came from here down to the low, and now we've moved up to a high level here. What does that mean? Well, that means that the deepest retracement since this or before is the beginning of the sell zone. And so you can see the sell zone is about here. It's about where this one touched and this one touched here. So we can expect prices to bounce from this level or higher once they get there. And if we look here, notice that we have another move. We have this one, which went from here to here, and from here to here. And notice that when price left here, sorry, this area here, it went up here. But on the way up there, we managed to have a bit of a pullback. And so this becomes the new buy zone. Okay, so we don't want to buy for a price any more expensive than the deepest retracement since this, and you can see it very clearly. Price went up and it went down, so this is kind of screaming at us, telling us that this is the beginning of the buy zone. Price came there once, and then price formed this little low here, and so this line is actually moved lower, and this is where price came to the next time. Okay, so price has already been back to the low of this. What does that mean? That means we need to look lower, and we can see that we have this area of demand below price. So this is where we would target to buy. Okay, and if we want to use the whole the buy side and sell side, we can do that. Let me remove all these, and then we'll put these on. So we have a couple of moves here. We have green. We have from here to here. Then we have the red from here to here. Okay, and within this one we have swings. Okay, so we have another sell zone from here to the deepest retracement, and inside we have the buy zone, which is from here to the top of the box here. Okay, that's telling us that we're only allowed to sell on this price move here, not allowed to sell here. And so we have to, when we're looking to sell, we want to reference price on the left side of this little square here, this box. Okay, because this is a leg that moved down. We have the origin, destination, and price is retracing. So price is going to reference price points in the move lower, not in the move higher. Okay, this is kind of something that's pretty important. And yes, of course, price formed had a bounce on this area here, and then we formed a new sell zone, and price went a bit deeper, and then price went a bit deeper. But for the bigger moves, you want to be focusing on the leg down. And notice that you have this leg here, have a low, high, high, low. Okay, and so due to the fact that we managed to form a nice turn, which is higher than this one, well, this tells us that we're likely going to begin to drift higher. Okay, and so you have to be aware of this, but you don't know this has happened until you start seeing supply consumed on the opposing side. Once this stuff here starts getting removed, and then ultimately this high starts getting taken out, well, then you know that, then you can assume that price is going to continue lower and start to move towards the origin or opposing demand, which we have just down here. Okay, but once price moves above, well, then everything changes, because then you have a new buy side, but you don't have the sell side yet. So you have to wait for that to form, and that forms once price begins to turn around and form a turning point. Okay, but you can't see that once price has done that. So here we have pretty clear sides of the market. We have the buy side, we have the sell side, and within the sell side we have a sell side and a buy side. Okay, so it's pretty interesting stuff. Let's have a look at something else. Let's have a look at this one here. Let's have a look at the euro Norwegian dollar. If we have a look here, if you go to the right to the monthly chart, we don't have enough data, so I can't see what the sell side looks like. All we can see is buy data. So all we can see that we have demand below price. Okay, and so it's really difficult when you have something like this, because then you don't know where price will potentially move to. You can just only see that price is only moving higher. We can't see any supply, and so this is why you have to be careful trying to pick tops and bottoms on pairs that don't actually show you where a potential top or a potential bottom will be, like this one. Let's find something else. Let's try the Aussie franc. If we look at this, do we have, let's go to the monthly chart. See here we only have, we don't have any demand. We can only see selling. Okay, we can only see the sell side. And we have that here. If you go here, color red, the sell side is from here to where price currently is. And there's no buying. I mean, we can't see because there's no opposing side here. There's no leg higher that this one is retracing into. And so buying is a really bad idea longer term, because you simply don't know where the price reference points are on the left. And this is one of the problems with some trading platforms when you don't have enough historical data. Okay, so you have to be a little bit careful. But trading on the smaller time frames changes this, because you can just go to a different time frame. Okay, so if we have a look, let's have a look on the daily chart. You see the price. So price has, we have this high. Let's focus on the most recent one. So we have a high and a low, and price is starting to form this high. So let's draw this from here to the current low. So this is sell price points, and we're beginning to form a buy price point. So from here up to here. Okay, and so in a situation like that, you want to be focusing on supply to sell at. Okay, and you don't want to be buying until price starts to form demand below price, which it is starting to do, because you can see that now. So you go to the 4-hour chart and you just look for really clear demand, and you can see here there isn't any. I mean, there's no clear demand. This is not demand, this is reactions to it, and there's nothing here. This is just price. This is price movement as a result of price being filled. Okay, it's just moving higher, down. There's no supply or demand in here on this time frame. Okay, so you have to be very careful. What you can see is that price is turned around. First of all, we turned around at this price point here. So beginning of the sell zone was the deepest retracement here. Price went through it and it referenced this little price nodule here. Okay, so we do have this really nice sell window, which shows us here we have a high, we have to low, and for the opposite side we can buy from here to the high. Okay, but notice there's nowhere to buy. There's no demand in here at all. We have something down here maybe, just because the software found something, but there's nothing to do there. And the next sell level is going to be a little bit higher, maybe around here. Okay, price came down, we left, pulled back the slingshot, and then we left. Okay, and you don't want to be selling for a price any cheaper than the highs of the deepest retracement at price points on the sell side of the market. Okay, well, I hope this is useful. I'll leave it at that. If you have any questions, please send them in. See you in the next video. Thanks for watching.